And we are live. Good morning, everyone. Okay. What we're going to talk about today is our, obviously, the pre-market futures. We're going to talk about our Microsoft trade. We did an earnings trade on Microsoft. They reported really strong earnings. Some weakness in certain areas of their business, but I mean, really good stuff in terms of a top and bottom line beat. So the initial knee-jerk reaction, it was not necessarily a knee-jerk reaction, it lasted a while, it was a sell-off in Microsoft. Let's drill down to a 15-minute chart briefly. And here you can see the initial reaction, knee-jerk reaction was up. Then it sold off and it just stayed there, bottomed out. Then later on in the evening, I guess the CEO or CFO, whomever, came out and said, forward-looking guidance is going to look pretty good. And I think they're growing like 16%. And this is a monster company. I technically, in terms of a monthly, quarterly, and yearly chart, I'm somewhat bearish on the stock, simply due to the fact that you have RSI trading above 95 on a quarterly and yearly basis. Monthly chart at last look, I did not look yesterday. It was down yesterday, maybe changed a bit. It was up over 80. We could check that out. But Microsoft did manage to bounce back on forward-looking guidance. It went positive, and it looks as though we're up slightly in the pre-markets after pulling back. So let's talk about the trade. Hey, John, Sam. Totally international show here today. We have New Zealand. We have Italy on. Good to have you guys. It's amazing what the internet's done. Amazing. Bringing all these countries all around, all together. So anyway, I digress. So let's talk about the trade. So I did some analysis, and I'll tell you, I was looking to trade Apple and Google as well. You couldn't get the premiums. Initially, on Microsoft, I wanted to open up a strangle. The risk v reward to go to the 277.50 strike for any reasonable put premium. Remember that a short strangle is a sale of an out of the money call, and at the same time, simultaneously, a deep out of the money sale of a put. So I looked for a reasonable premium. The premium that was most attractive to the put side was 277.50, and we had only just been there last Monday, not this Monday, the prior Monday, and we have RSI on a quarterly and monthly time frame, yearly time frame above 95. So if Microsoft would have disappointed in any way, whether it be they could have beat on forward-looking they could have beat on EPS and revenues, but their forward-looking guidance, if it didn't come out, the stock was getting hammered. We were down to 276.69. So I think the guttural reaction to the premium versus the reward just wasn't net was appropriate that we not take that risk. So I took that risk off the table. So I went with a naked call only, a directional play, and there was a 2.79 probability of the shares trading above 295. That was our strike price. And we collected a premium. Not that we made that money yet. It looks good. The market hasn't opened up yet. For all I know, I'll have my face ripped off. We want to stay humble. So we collected a premium of $1.39 on 10 contracts, so $139 times the thousands, it's $1,390 potential profit. We're not going to make that much. I'm not going to stick around that long. Why? Because I want to use that money for other trades. So we would need to wait until Friday for these options to expire worthless. If I didn't say that, These options expire on Friday. And we have other trades we want to put on. What are we looking to put on here? Well, we're looking to put on a trade of, what's tonight? Facebook, PayPal, Qualcomm, one of those three. I forgot about Shopify they were reporting this morning. That would have been a good trade. I think I traded them last quarter. Now, tomorrow, assuming that we roll out of either the Facebook and or PayPal or Qualcomm trades, we're going to look to do earnings trades on Amazon and or Twilio. It all depends upon, I keep saying and or. It all depends upon the premiums paid. Is it worth relative to the risk? And that'll impact our position sizing if we decide to move forward with the trade. And these two trades here will let expire worthless into Friday because Friday's options expiration. So we're going to try to take Microsoft off today. We're going to put an advanced order out. I'm going to enter it as soon as I log off here. Roughly a 50% profit target. Then we're going to shop around late this afternoon for Facebook, PayPal, Qualcomm as our new trades for the day. We did very, very well with our Tesla trade. That was I'm going to throw out, it had a 70 handle in terms of profit, 75% profit on that trade. So we did very well. I don't know if we're going to do as well with Microsoft, but 50% profit, we can't complain about that. All right, so let's get to the pre-market activity. Oh, you know, before we go to pre-market activity, let's talk about economic data. Durable goods. Where are our durable goods numbers? They didn't update this. I'm not going to bore everybody looking for this. One more page. Last page. Got to do it. We're so close. Here we go. U.S. durable goods orders unexpectedly slow in June. Look at this drop off. So keep in mind, folks, that when you're seeing this slowdown here, it makes it all the more harder for the Federal Reserve to do what they should have done years ago and to begin to taper, begin to raise rates. They can't. The economy's too weak. It is so addicted to stimulus, so addicted to QE that if they taper, if they stop, everything falls apart. We are trading on a house of cards right now. So as this economic data comes out, you might expect that bad news is bad news for the stock market. No, it's actually good news. It only prolongs the QE. It keeps the heroin flowing. So eventually, and I think you're already starting to see it, and this is my long way of saying that, look at this. This is much more in line with the slowdown in manufacturing surveys. It appears that Q2 was the peak of the recovery. Think about it. So it appears as though what's happening here is that you're beginning to see signs of life in precious metals. And we are very, very long of precious metals. And we've been buying this dip. First, we want to take a look at the U.S. dollar this morning because that does matter. The dollar, let's go to a 4-hour chart. The dollar has been breaking down below support levels, as goes the U.S. dollar. Inversely goes precious metals. So what we want to know is if we get a continuation breakdown on the US dollar. Dr. Copper, I was looking at copper on my iPhone when I first woke up this morning. Every single commodity was up, with the exception of copper. It was down slightly. I mean, copper's looking good net. It's not a bearish statement. It's just an observation. We'll take a look at the chart. So we're putting in lower highs and lower lows on the US dollar. So check the box if you're looking for a really, really solid catalyst to send precious metals higher. Not to mention, not to mention seasonality. August, a very favorable period of time for gold and the miners. Now, taking a look at gold, gold is down in the pre-market. The however is this. We broke out. We've been in this 4-hour consolidation. Let's say it happened here on this breakout on July the 5th. So we've been consolidating. We attempted a breakout point failure. We failed. We held support though. Now we've broken back out above resistance. Very bullish stuff. RSI putting in higher lows, a little bit sloppy here, broke down to new lower lows, below support. I shouldn't say lower lows. It broke down below support, not a lower low. I retract that. So what we're looking for here on the dollar, excuse me, on gold, still early, first cup of coffee, is a higher low. This is a 1-hour chart now. And then we're looking for a breakout to new higher highs. There's a lot of fear and uncertainty in the global economy. Think about what's going on. China. Major problem for equities. Think about all the Chinese listed stocks and what they did to shares of Didi and a number of other educational stocks. The educational stocks over in China, they made them not for profit. Think about it. You bought a stock on the NYSE, like NEO's listed there, or another NASDAQ listed stock, China-based, and all of a sudden, the thing just goes public. Oh, yeah, now all of a sudden, now that we have U.S. dollars in our pocket from the U.S. investor, now you're a nonprofit, or now your charter has changed. Your business model has changed the day or two after you go public. Think about it. Or Jack Ma is disappeared. I don't know how anybody invests in these names with threatening a breakdown here. I don't think it's going to hold. Light volume. Yeah, just bounce back. Kathy Woods was on Twitter, or was interviewed by Bloomberg, and she's saying how she's going to now lighten up on Chinese stocks. I've been saying for years, how do you invest in Chinese stocks? This story was written a long time ago. Google, looking good pre-market. Good earnings. I want to take a look at Nugget in the pre-market. Nugget drifting up higher. These are the senior miners, leveraged ETF. They did well yesterday. The junior miners did not do so well. Here's a GDXJ. But they are rising in the pre-market slightly. Let's go to equities. Let's go to a 4-hour chart. S&Ps are up. Let's stick with the hourly chart. More to work with here. They're trying to break the S&Ps out. They broke them out last hour. Excuse me. And probably a 4-hour bar. Let's check that out. Yes, they broke it out on a 4-hour basis. Now they're doing a retest. The question is, does it hold? So S&P's potential breakout here after putting in higher lows. Mid caps up nearly a half percentage point. Looks like a little bit of sector rotation here. My guess is that we're going to have potential rise in yields. And that'll send money into mid caps, small caps, and your large caps, cyclical names, bank stocks, bank stocks, bank stocks. Where are my NASDAQs? I just had them up. Oh, here they are. The NASDAQ up just shy of a 0.25 percentage point. Let's take a look at it from a higher level view. So the question is, do we break support? Do we see sector rotation? I've been of the mind since Monday that's what we're going to see. Thus far this week, I've been wrong on yields. I think that's because of the weak economic data. Let's check out bonds this morning. Bonds are down, therefore yields are ticking up higher. Maybe I'll get made right today. Bitcoin ripping up higher this morning. Let's go to copper. All right, copper. Let's pull back for a moment. All right, so copper on a weekly time frame. It's now positive on the session. It was down. Wait, is this right? Yeah, that is right. Okay. We broke out on the last week. Continuation breakout this week. Copper's looking strong here. Very, very strong. We got overbought relative to the third standard deviation Bollinger Band on a daily chart. We're pulling back, consolidating now. RSI is now at 62, stair-stepping higher. I think that we're consolidating. We're probably going to put in new higher highs in the coming days. Copper looking very, very strong. It's just coming off of an overbought condition. Next stop 1.0. I'm not. Oh, 10-year yield. Oh, okay. I thought you were talking about copper. I missed that last statement. DNX. I don't know. You're talking about, if we go to 1%, I mean, you're talking about such negative yields in real terms. And for those not familiar with what that is, that's adjusted for inflation. So if you're of the mind, think about import-export prices last month. They were double digits. CPI was what, 5-6%? You got to double what the government tells you. So that falls in line with the import-export prices. So that means that real negative rates on the 10-year yield are, I mean, Jesus Christ. Negative 0.8% right now in real terms. Is it possible? Sure, John. Who would have thought that we would be back where we are right now? Sure, it's possible that we head down there. Is it improbable? I think so, but I don't want to make that call. We're talking. This is clown world. This is such utter clown world that we're in right now. This is the last gasps of capitalism right now. It's a bold statement, but either we get right with the world and start doing what's appropriate, or this doesn't end well. You know, we've seen times like this in prior periods, and honestly, whenever you see something like this happen, where you see a potential hyperinflationary situation, major debt, the rolling over of an empire, you see war. You see, and I'm not talking about U.S. versus Afghanistan. I'm talking about a near-peer war, because it behooves the country that's going to go to war. Not that we're going to do well with it. I wouldn't be. Listen, if John's statement here is the general talk was 2+ by the end of the year. It depends upon if the Fed loses credibility. The Fed will not make the move. They can't make the move. If they normalized rates to 2+, that's not even normal. That's still historically low. If they went as high as 2%, you'd see this stock market just go everything, banks, everything down. If you see the bond vigilantes take over, and they take that long end of the 10-year or the 20-year, the 30-year bond price, they send it up skyrocketing higher, and it appears as though the Fed has lost control, we roll over. We're on such thin ice right now. The trend short term is favorable towards equities. But once this trend, let's go to it. And this is why we hold short positions, because it's just a matter of waking up one day and the music stops. You know, this is a weekly chart of the 10-year yield. To me, it looks as though it wants to go lower. There's going to come a point in time where that comes to an end. We're already very long in the tooth on the stochastics, and you know, the appropriate way to use your Stokes is looking back in time and saying, okay, I'm using my Stokes to help guide my trading. So question number one that I would have for leveraging my stochastics is the bottom for the Stokes, is price higher than the prior low? Let's take a line out here. Here's the prior low, or if you want to use this here, whatever. Is our price relative to this oversold condition now higher than it was back here? The obvious answer is yes. So as long as we continue this trend higher of higher price action, and now our Stokes are oversold, and they could stay oversold for quite a while, months, if is not out of the question. But when they hook back up, look out above, man, because the trend is still clearly up. We're moving up higher. Despite this sell-off from the beginning of the year, the trend is still up longer term. If you look at a monthly time frame, weekly time frame, down, no doubt about it. But eventually, this is going to come to an end. And things are going to get real fast. Tech stocks will go first. Then you see 2.1%. Then everything else begins to roll over. Look back period for your stocks is 14 period moving at 14 period. Yes, 14 periods. I don't change the formulas that much. And do I have chart requests? I'm getting long in the tooth here. I only have time for members. Joe for Franklin. That's a Tetrium. Right, I thought it was a Tetrium. Oh, it's iPath. All right, Joe. Monster. You know, we called this breakout a while ago. Not that I acted on it. So monthly time frame, very overbought relative to the third standard deviation Bollinger Band. Weekly chart. A very strong gap up higher this week. Amazing. Really amazing price action. But there's no inflation, though. There's no inflation. Don't worry about it. Don't look here. So weekly chart, very extended. I couldn't condone a buy here. I wouldn't short it. Daily chart. Can they pop it up higher? Sure. It's a commodity. They're ripping shorts faces off right now. I'm not sure if they're done. But would I initiate a new trade in either direction? No way. You got to wait for the pullback. Filling of the gap at 55 or 50. Those are interesting levels to get long of. But right now, I would avoid. I would watch the show and leave it at that. And with that, folks, if you could smash that like button, I'd appreciate it. John, Sam, everybody have a great day today. Profitable trading day. And we'll talk about that Microsoft trade tomorrow morning, how we took it off. And everybody be well.